Hey, Dan Passarelli here. Well, I've been talking for quite some time now about how the market doesn't like uncertainty, and they've been waiting and waiting and waiting for a deal on tariffs to finally come through, and then maybe the uncertainty will be over and the market will go up and everything's great. Well, today, guess what happened? The U.S. reached its first deal. It was a deal with the U.K. And, market went up a little bit. I think the market is just not 100% sure what to think about this. The U.S. in 2024 imported approximately $68.8 billion worth of goods from the United Kingdom. We, the U.S., I should say, exported to the U.K. 57.1 billion pounds. As expected, as you've been hearing in the news, we are a net importer from the UK in this case. From the UK, the US imports a lot of pharmaceuticals and medicinal products, automobiles, aerospace components, organic chemicals, and some machinery and mechanical appliances. Seems to me that the big winner is British luxury cars, your Rolls Royces and your Jaguars and all of those kind of things. Because the automotive tariffs, the U.S. will reduce those tariffs from 27.5% to 10% for up to 100,000 vehicles annually. And then beyond that quota, it's a higher tariff. As far as steel and aluminum, well, they created a framework for those metals, and I'm not really 100% sure what that means, and I'm kind of guessing the market's not really sure either. For agricultural access, the UK will allow increased U.S. agricultural exports, but, a big one of the problems with that is in the U.S., we've got lower standards than most of the world, and the British will still enforce their standards against things like hormone-treated beef and that kind of thing. So I think somebody's going to have to really figure out exactly what that part of the deal even means. As far as tariff adjustments, this is kind of interesting. The UK is going to lower tariffs on U.S. goods, I guess, in general, from 5.1% to 1.8%. And the U.S. is going to maintain their 10% base tariffs on most British goods. As far as the deal with aerospace and pharmaceuticals, well, there's some sort of deal, and I have not been able to find any real details on that. And then the only other one I was able to dig up is the digital services tax. That is the UK's 2% digital services tax on US tech firms. That's going to stay unchanged, but they're going to work on a digital trade deal to reduce trade barriers. So if you were wondering why the market just didn't take off like a rocket ship after this trade deal was announced, you can stop. I guess you can keep wondering. I think there's a lot of things that need some more wondering about. I guess as details come out and the head scratching ceases, maybe we'll get some answers to that question, but it's not looking like a rocket ship scenario so far with at least this deal. So, hey, we're going to have to see what the rest of it leads to. Now, interestingly, from a volatility standpoint, well, actually, it's not interesting at all. It's exactly what one would have, what I would have predicted anyway. The VIX is down 1 point to 22.48 on the close, which still elevated, but a little bit lower than it was, which sounds really about right. The market itself, look at this candle right here. Average-ish volume, a little higher than average for the past 6 months, but a doji with long wicks. That's a great deal of uncertainty right there. So we continue on basically the same path with this uncertainty and with expected volatility, and it remains good for option selling in certain situations, looking for overbought markets to sell covered calls and call credit spreads, oversold scenarios to sell puts and put credit spreads. Same game, and I kind of like that game. Hope that helps. This is Dan Passarelli, Trade Smart.